Welcome back, folks. Oh, it's been quite the week, hasn't it? Even with the Federal Reserve delivering a hawkish blow, hinting at only two rate cuts instead of four for 2025, with markets seemingly in free fall and stocks dropping left and right, it might feel like there's no safe haven. But even in this chaos, my channel is here to spotlight hidden gems, stocks defying the trend and delivering explosive breakouts. Stick around till the very end to catch all four picks. You don't want to miss the nuances behind these standout moves. Remember, the stocks I feature are all about short-term swing trades, heavily focused on technical analysis, with just a light sprinkle of fundamentals for context. And as always, this isn't investment advice, so trade wisely. All right, let's kick things off with our first pick. SoundHound AI Inc., a technology company focused on voice, sound, and natural language AI technologies. Based in Santa Clara, California, SoundHound is at the forefront of revolutionizing how humans interact with machines through advanced artificial intelligence solutions. Here's the scoop on their numbers. SoundHound has a market capitalization of over $9 billion, placing it firmly in the large cap category. However, the fundamentals are, a bit shaky. The company reported sales of $67 million, yet incurred a net loss of $111 million, giving it a profit margin of negative 165%. With an EPS of negative 36 cents and no dividend yield, it's clear they're in the growth phase with an emphasis on expansion rather than profitability. Now, on to the exciting part. The technicals. Let's switch to the weekly time frame, shall we? On May 2nd, 2022, SoundHound hit a significant high of $18. For over 2.5 years, the stock struggled to break past this level, consolidating and frustrating bulls. But finally, on December 16th, 2024, it staged a spectacular breakout, breaching this critical resistance level with conviction. This breakout isn't just a number, it's a statement. Breaking through such a long-standing resistance often signals a significant shift in market sentiment. The key here is to watch for a retest of this breakout level. If the stock successfully holds above this zone, it could pave the way for continued upward momentum. On the flip side, a failure to sustain this level might indicate a false breakout, so caution is key. You know, the stock market has over 4,000 companies. It's overwhelming to track them all. But with my IT background, I've streamlined this process to bring you only the best picks at the most critical levels. Subscribe for updates and let me do the heavy lifting for you. Next up, let's talk about Champions Oncology Inc., a healthcare company that's redefining cancer treatment through its cutting-edge tumor graft technology. This platform allows personalized cancer care by testing treatments on immune-deficient mice implanted with human tumors. The company has a modest market cap of $103 million, making it a small cap stock. For the fiscal year, they reported sales of $53 million, with a small loss of just $600,000, translating to a slim profit margin of negative 1%. With an EPS of negative 5 cents, it's clear the company is inching closer to profitability, a milestone worth watching. Now, let's dive into the charts. Switching to the weekly time frame, this stock tells a compelling story. Back in September 2018, it reached a peak of $18. However, the road since then has been anything but smooth, locked in a relentless 6-year downtrend, with the stock consistently rejected by a stubborn descending trend line. Finally, on December 10th, 2024, the stock made a bold move, breaking through this trendline resistance for the first time in 6 years. This breakout is significant, not just because of its duration, but because of the potential momentum it could unleash. Here's the important part. Keep an eye on whether the stock can solidify this breakout by forming a new support level above the trend line. A sustained move above this zone could attract fresh buyers, propelling the stock higher. But if it falters, it might re-enter the downtrend. Remember that flashy 10x stock you saw in a YouTube ad? The one that ended up tanking 30%? Yeah, we don't do hype here. This channel is about real analysis, straight from the charts, no fluff. Stay tuned, we've got more fascinating breakout stocks coming up next. Let's turn our attention to Ollie's Bargain Outlet Holdings Inc., a consumer defensive company specializing in retailing closeout, excess inventory, and salvage merchandise. Based in Harrisburg, Pennsylvania, Ollie's is known for offering bargains across a variety of products, from housewares and electronics to books and toys. Here's the rundown. The company boasts a market capitalization of over $7 billion, putting it in the large cap category. On the fundamentals side, Ollie's reported $2.2 billion in sales, generating a net income of $207 million, with a healthy profit margin of 9%. Its price to earnings ratio sits at 35, with an EPS of $3.36. While it doesn't offer a dividend, the company's profitability and consistent growth make it a solid name in its sector. Now let's take a closer look at the technicals. On the weekly time frame, Ollie has established a key high of $112 on August 24th, 2020. Since then, the stock has faced repeated rejections at this level, consolidating and forming a range that spanned over 4 years. But here's the exciting part. On December 16th, 2024, Ollie's finally broke through that critical resistance level with strong momentum. This breakout is significant because it not only signals a potential end to the consolidation phase, but also opens the door for a new bullish trend. For swing traders, the key here is to watch how the stock behaves in the coming weeks. A successful retest of the breakout level could confirm the move, attracting more buyers and driving the stock higher. However, as always, be mindful of false breakouts, especially after such a prolonged period of consolidation. I'm not here to promise skyrocketing returns or overnight miracles. What I bring you are opportunities at key levels backed by solid technical analysis. No hype, just actionable insights. And now, let's wrap up with SkyWater Technology Inc, a technology company providing semiconductor development and manufacturing services. Headquartered in Bloomington, Minnesota, SkyWater focuses on innovative solutions in chip design and packaging. SkyWater has a market cap of over $700 million, placing it in the small cap category. The company reported $346 million in sales, but with a net loss of $16 million, its profit margin stands at -5%. With an EPS of -35 cents, it's clear the company is still in its growth phase, investing heavily in future opportunities. Now for the technicals. This is where it gets interesting. Switching to the daily time frame, SkyWater hit a peak of $16 on February 16th, 2023. Since then, it's been caught in a prolonged downtrend, facing repeated rejections from a well-defined descending trend line. Finally, on December 17th, 2024, the stock broke out of this trend line, marking a pivotal moment. Such breakouts after nearly 2 years of downward pressure are often accompanied by renewed buying interest and strong upward momentum. Here's the catch. Breakouts are exciting, but they're only half the battle. To confirm this move, traders should watch for the stock to establish support above the trend line and build momentum with higher highs and higher lows. This is where patience pays off. Waiting for confirmation can save you from getting caught in a failed breakout. All right, folks, that wraps up today's list. 4 incredible stocks showing remarkable breakouts, even while the broader markets remain under pressure. Remember, the purpose of sharing these stocks is not to suggest that they'll necessarily continue their momentum, but to highlight stocks breaking out and catching the attention of other investors. Use this as a starting point for your own analysis. If you found value in today's video, don't forget to like, share, and subscribe. Your support helps me keep bringing you the best stocks at key levels. And before you go, check out my other video, visible on the screen, where I dive into swing trading strategies for stocks and uptrends that are currently at support. Perfect for finding high risk to reward ratio trades. Until next time, take care, trade smart, and I'll see you in the next video.